All right, we're back with you. Thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you. And, well, as we watch our grain trade activity today, it's like somebody threw a banana peel under it. It's just, in general, starting to slide downhill. Let's take a look at the corn market here with our quotes provided by Bar Chart. On the corn, well, my bad, that's still showing the Dow, which is down 359. Corn, right down March, down 5 3/4 cents at 640 and a half, only a half cent from our low of the day. Look at where we had the high last night, 649, and now we're almost 9 cents off of that. We sold over 130,000 tons of soybeans to China over the weekend, had some decent gains going there for quite a while, and now it's battling just to stay above unchanged. Right now, January up a penny, and you have March unchanged at 1446 and a half. So kind of fading as we go here later in the day. In Chicago wheat, you now have the March contract, believe it or not, 20 lower at 741 per bushel. We had a high last night of 768. Now we're 741. That's a 27-cent drop from that overnight high last night. And we have blown out support in Chicago wheat. March Kansas City wheat down 19 3/4 at 851. Look out below. In the Minneapolis market, we now have March trading 8 3/4 lower. It's at 912 and a half. It had been higher on the open this morning. Cotton trade in the March contract, we're now 6 points lower at 83.14. My goodness, it had been about 200 points higher in the overnight trade. Let's go ahead and bring in Todd Bubba Horwitz at BubbaTrading.com, see if he can help us make some sense out of this market action. He's in Las Vegas right now. Always good to visit with you, Todd, but things looking a little dire here on a Monday morning. But is this just a lot of bluster amid kind of a thin trading volume this time of year?
Marlon, the trading is as bad as it gets. There is nothing going on. The volumes are probably half of historical norms for this time of year. We've got all markets, not just the grains, not just livestock, not just the equities. Every single market is lacking any real activity, with the exception of maybe crude. And of course, we've seen a dramatic turnaround in crude this morning. Again, I'm still extremely bullish longer term. However, I wouldn't be looking to enter more, or if I hadn't entered yet, I wouldn't be looking until at least the market gave me an indication that it's ready to start to turn around yet. And all we're seeing now is kind of a drift. And typically in dull markets, commodities will tend to drift lower, equities will tend to drift higher. And right now, as of this morning, almost everything is just drifting lower.
So I'm curious, what are you watching for when it comes to clues that maybe the market is ready to finally make a turn and go higher?
Well, first of all, we need to see some volume, Marlon. We need to see some participation. I think what you're watching right now is fund money and big banks trying to push prices lower because they're looking to accumulate at lower prices, because I think they're in agreement with me that the commodities in general are probably going to have a big boom market coming shortly here, probably in first quarter starting, maybe second quarter 2023, because of all the shortages, all the issues, all the problems we talk about all the time. And I think you're going to see some pretty robust markets. But right now, they're just drifting lower. But I think when you have very thin markets, which is what we have right now, it is much easier for somebody who's got enough capital to put a little pressure on them. And I think that's what's causing this slower drift.
Interesting. All right, Todd, if you would, sit tight, and we'll come back in a moment, and we'll talk about our livestock trade. Todd Bubba Horwitz is our guest. We'll be right back. All right, we're talking with Todd Bubba Horwitz at BubbaTrading.com, and he's in Las Vegas today talking with us. Let's look at this livestock trade. While the grain market is getting weak in the knees, livestock are just kind of holding in there. We actually had a weaker live cattle trade early today, but right now it's just a little bit firmer. February live cattle 30 higher. We're at 156.17. We had been 20 cents higher than where we are now at one point. On the feeder cattle market, they were kind of emboldened when the corn market sold off today. January feeder is now up $1.55 at 184 even. That's only a couple of ticks from our high of the day. And it goes without saying the nearby contracts are showing much more strength than the deferreds are. March is up $1.27 right now. Lean hogs, well, they're kind of mixed right now. February 42 higher at 90.85. That would put us $1.05 off of our earlier high. So for a while, had a good, strong surge going in the February lean hogs. And Todd, that's all gone now. The deferreds are actually turning weaker. What happened there?
Well, I think we're looking at the same issue here, Marlon, and I think that the hogs and the cattle are taking turns depending on what's going on in the price of crude oil. So as crude oil comes down, we see cattle jump a little higher and we see hogs jump lower. I think if oil rallies, we'll see the reverse. And I think what you're really looking at is I'm bullish the livestock, but to a point. I don't know how much higher. I don't think there's a ton of room to go up from here. But I'm certainly not a seller here. I think that really these are markets that are probably range bound. Let's say, feeder cattle probably, 170 to 185 or 190, and fats, probably, 150 to 170. Again, I don't think there's a lot of room to go in either direction right now. I think the overall mass confusion in markets in general and in the economy have kind of had these locked in range-bound trading until we see a reason to either break them out to the upside or break them to the downside.
When you have the Dow down 330 points today on the December futures, does that raise caution flags as well for future meat demand?
Not really. I mean, remember, 300 points is less than 1%. So it's not, if you had a $100 stock that was down 1%, you wouldn't even think twice about it. And I think we get sometimes too caught up with the big numbers, which are really, we should be more concerned about the percentage basis.
All right, and looking at the U.S. dollar index, let's bring that up and see what it's doing today. It's starting to firm up a little. We have December futures there now, 670 points higher at 105.185. The crude that Todd was just talking about, it had been higher when we came on the air, and look at that range today, January now, down $1.46. At 78.52 per barrel. So quite a flip-flop there in crude. Todd, good to visit with you again. Thank you, sir. Appreciate it.
Thanks, Marlon.
Have a good week out there. Todd Bubba Horowitz at BubbaTrading.com. Well, Tammy, with that, I'll turn it back to you.